Hello, everybody. My name is Ari Redboard. Welcome to TRM Talks. So today is a very special day. It's an historic day, groundbreaking day, I might say, for TRM Talks. First of all, this is about the 1-year anniversary of us doing this series of talks with movers and shakers in the crypto space. And to celebrate, most importantly, we are live. So we have an extraordinary audience with us today of really policymakers from the public sector. We have business leaders from the private sector. We have regulators, law enforcement, and really excited to see an awesome chat, to see really terrific questions that I'll be monitoring to pose to this really extraordinary panel of really true crypto ninjas and legal eagles and people who are the tip of the spear of protecting their businesses, but really the entire crypto ecosystem from illicit actors, and also to ultimately conform to sort of regulatory standards. So, in terms of one other housekeeping matter, want your questions, love your questions. And two, for any of your friends who are already having FOMO for having missed this, we are recording it, and we will you'll be able to watch this again for any of you on now, or friends and family afterwards. So without further ado, I'm really going to kick it to our to really this extraordinary panel. And I would love to sort of go around and have you guys introduce yourselves, but really also talk a little bit about sort of your journey to cryptocurrency and your role now at your present organizations. So Marav, why don't I kick things off with you? First of all, welcome to TRM Talks, and thank you so much for joining us.
Hi, everyone. Thank you, Ari, for inviting me. This is really great. Looking forward to this discussion. So I'm an attorney. I've been practicing law for about 10 years, started my career in traditional law firms representing tech companies, and have always been very passionate about tech and innovation, and discovered crypto about 4.5 years ago and decided to go all in and jump into it and just learn everything I can about it. And so I joined the Wall Street Blockchain Alliance. They had a legal working group in New York, focused on the regulatory landscape and figuring out what advice to give customers operating in this space, clients operating crypto businesses in this space. I then joined eToro as the first legal counsel in the US to help launch their retail crypto offering, to establish all their programs and licensing work at the state level, including the bid license application and product advisory. And in 2020, I joined Floating Point Group as the VP of Legal and Compliance. Floating Point Group, FPG, is an MIT-born startup, started about 3 years ago with a team of about 25 individuals, focusing on building infrastructure for institutions and high net worth individuals trading crypto. There are a lot of inefficiencies in the crypto market, so Floating Point Group is building a bridge to allow for more efficient trading activity. So we basically connect with one onboarding experience. We connect customers to the entire ecosystem of trading venues, which includes exchanges and OTC desks. And I lead legal and compliance, which means I am in charge of the compliance program, establishing all the policies and procedures and operationalizing them and making sure that the business is compliant, as well as some legal aspects and advisory on the product.
Fantastic. Yeah, no, thank you so much. I mean, we're going to get pretty technical today, and just really excited to kind of hear from you about how you build that and maintain it. Mikhail, would love to hear about your journey to crypto and sort of what you're doing now at Circle.
Yeah, thank you, Ari. I'm so glad to be here. So I'm Mikhail Musharafi. I'm the director of product and blockchain compliance here at Circle Internet Financial. Prior to this, I was at Facebook working on the Libra project, where we were building both the Facebook digital currency wallet, but also thinking about how to build compliance controls and build a regulated network itself, which was definitely a first. And then prior to that, I was at Coinbase for a number of years, where I wore a number of hats, whether it was from the support operations team, working in compliance operations and investigations, up to management, and really thinking programmatically about asset listings, the emerging landscape, the risks that were kind of unique to the time of emergence of ICOs, et cetera. My journey is pretty unique, actually. I'm a crypto native compliance professional. So, I was sort of turned by the words of Satoshi in 2012 and 2013, and a community of bright minds, encouraged me to get more involved and learn. And so it was really from the ground up that I started with the crypto first, and the compliance came with my experience at Coinbase, where, working more in the support operations area of the company, identified that I had a knack for identifying kind of the suspicious typologies and indicators for folks that were abusing the platform. And that allowed me to become more involved in that side of the organization. So at the time, we were pretty limited on what tooling was available. A lot of the rules of crypto compliance hadn't been written yet. So had a really special opportunity there to work with the engineers and great minds there at Coinbase to think about what transaction monitoring looked like, think about what sort of unique tools and controls that we would build there. So it's been a very special opportunity, and every day is new. So so glad to be here. Thank you.
That's awesome. And I think it's so interesting because I think there are so many folks who are with us today that are really sort of taking a little bit of the opposite journey, right? Where they've been AML professionals, compliance professionals for years at large financial institutions. And now they're really sort of on that journey to crypto. So it's really cool to sort of hear you flip that and talk about sort of how it was crypto and then AML. Ashley, kicking things over to you. How does a crypto lawyer become a crypto lawyer, and sort of walk us through your journey here, and how you sort of currently think about your work.
Sure. Well, thanks also before I get into this for having me on. It's great to be on with you, who I know quite well, but then also to meet everyone else and hear about their impressive backgrounds and get their views. My name's Ashley Eversole, and I'm a partner in the DC office of Brian Cave, Leighton Paisner. We're a global law firm in about, I lose track, 35 offices worldwide. Have about 1,500 lawyers, and we do fintech and digital assets out of a good number of those in Southeast Asia and continental Europe, as well as principally in the United States. And I got to this, the first law firm I joined out of law school was a New York firm called Skadden, and I was there for about 6 years doing a mix of financial regulatory and securities work. I then left in January of 2015 to join the SEC. And I had done at Skadden what qualified then as fintech, which was, a lot of payments work, bank mobile app work. Bitcoin existed, but I don't think there was yet much thought that, blockchain-based instruments were going to be used for capital raising. I think everyone thought, oh, this is an awesome financial technology. This could replace stock exchanges or other financial markets, as kind of a, maybe someday type thing. And then I got to the SEC, and within a year, I joined the working groups there, headed by a woman named Val Skapanik, that were looking at these issues from the SEC's perspective, from many different angles. And that was a working group whose members issued the Dow report in July of 2017. And then from there, it was sort of a regular conferring on where do we go from here, where do we go next. I think, candidly, everyone thought at some point that would rotate from triaging enforcement matters to implementing regulation and guidance beyond what has actually been put out so far. We haven't gotten there yet. Chairman Gensler says that they're working night and day on it, so maybe we will.
Yeah, no, that's super exciting. And in a moment, we're going to have you help us with sort of a regulatory overview that the rest of the folks are really sort of what are the regulators and the regulations that these guys are complying with, essentially. But Ilyas, let me jump to you. Frankly, also making history today, first ever sort of TRM person on a TRM Talks, which is fun to have you. But like, such a unique background and have really sort of moved through the space. So I'd love to kind of hear about that journey to crypto, and then we'll dive in a moment.
Thanks, Ari. I appreciate it. So my name is Ilyas, and I'm a deployment strategist here at TRM. My background is in compliance and investigations. So before TRM, I used to work at Bittrex. It's a US-based cryptocurrency exchange. I joined Bittrex in January 2019. I was like third analyst hired, and I helped out build the compliance team there. Everything was manual, and we helped move it over to everything to become standardized and automated. When I left, we had about 25 people, and I was leading the special investigations team. My team focused on complex investigations related to illicit entities, and then we also managed all law enforcement inquiries and requests. Today, as a deployment strategist here at TRM, I work closely with all of our crypto businesses and financial institution customers to make sure they're using the tool to the best of its capabilities. At the same time, understand best practices, what kind of workflows they can implement to manage their alerts as they use transaction monitoring. Also, understand the different typologies, and whenever I can, I help out with ad hoc investigations. So yeah.
Fantastic. Yeah, no, thank you so much. So yeah, let's jump right in. Mikhail, I'm going to start with you. Look, when you guys are maintaining your compliance programs, obviously you need to sort of think about, all right, what are the regulations and who are the regulators? If you can sort of give us an overview of sort of how you're thinking about it. And then I'm going to ask Ashley in a moment to sort of, go through sort of who are the regulators that we should be thinking about and what are the sort of top of mind regulations. But let me start with you there and sort of like what are the regulations and who are the regulators you are most concerned about in terms of building that compliance function?
Yeah, thanks, Ari. So as we all know, this is a rapidly emerging regulatory landscape. Principally, FinCEN is our primary regulator that we from an anti-money laundering perspective, and obviously that's US centric as well, right? As we continue to expand our services globally, there's regulators that come in, whether that's in the UK or Bermuda, where we're providing services. The regulatory landscape is quickly changing. So whether it's from anti-money laundering, securities, commodities, right? The SEC, has not ultimately taken a position on stablecoins at the moment. The CFTC, there's this sort of jurisdictional question of where they play there. So when we're examining new products and services, and when we're looking at expansion, those are factors of sort of well, we know who our primary regulators are, we know what our obligations are, but what sort of are we anticipating down the line? And I think Ashley can speak strongly to sort of the emerging asset classifications and changes that are occurring there. But principally, it's FinCEN and that's part of our SAR filing obligations and our transaction monitoring and all the controls that we have to fulfill those obligations.
Terrific. Yeah, no, thank you so much. And what I think was so interesting, and I think we'll get to more as we go through, is that like when you talk about who's your regulator, right? It's not really the question, because there are potentially each crypto business, each compliance team is really responsible to so many different regulators across so many different regulations. And I think that'll probably end up being a theme today, is that like you don't have a regulator, you likely have many, and they're in many jurisdictions.
Yeah.
And sort of that's the challenge that you guys face every day, and sort of trying to keep up with those. Ashley, so let's kick things off with you in terms of sort of like, all right, what are the regulators you're thinking about? And I will jump in as well, sort of when it comes to the AML FinCEN piece.
Sure, thanks. So we had some slides. Are those up or
They are now up. Yep.
They're up. Okay. Okay. There we go. Yeah. So basically, as you see beyond the title page, the federal regulators are basically going to fall into two camps. You got the financial markets regulators, which is the SEC, and the SEC essentially is going to have jurisdiction over any crypto assets that meet their criteria for being a security. They have a few tests for that. You've probably all heard of the Howey test, which is there an investment of money in a pool of other money that's being put in by other investors, and is it being deployed in such a way that the investor is going to expect that they'll earn some kind of return on their investment based on nothing that they do beyond just putting their money in. It's all the efforts of the enterprise or the people at the enterprise who are doing something to make money with the capital that they've put in. There are other tests like notes, anything that looks like a fixed return that is being earned. Like those are all technically securities. There are carve-outs to that for things that courts usually have said are not securities, like notes secured by a mortgage loan are not securities for this purpose. And basically anything outside the categories of what are securities, and so regulated by the SEC, the CFTC is going to be the regulator that you think about for anything else. The Commodity Exchange Act that the CFTC administers has a very broad definition of commodity. So it's also a little bit strange because the SEC has, I guess, what I'll call prudential regulation. They require if you have security, it's got to be registered. Its offering has to be registered with the SEC. There are these parameters around how it can be traded and that kind of thing. Nothing like that really exists in the spot market, at least for commodities. And the same is true for cryptocurrencies in the spot markets. The CFTC has stringent oversight of derivatives around those. But, really the CFTC's main role with the spot markets is if there's fraud committed in connection with a cryptocurrency transaction, the CFTC will be the one to investigate and enforce that in that context. And then you've got the financial crimes regulators. I know that Ari's going to go into a little more detail there. I'll just, basically FinCEN is, oversees requirements for any money laundering programs, counter financing of terrorism programs, and anything to do with the illicit use of money or instruments that can transfer value like money can. And then OFAC has a pretty narrow purview, essentially oversees policing U.S. sanctions programs and maintains a list of countries and then persons who are inherently illegal to transact with. And that those restrictions apply to cryptocurrency just as they do to fiat currency. I guess beyond the feds, you've got states. A lot of states have, not all, but a lot of states have money transmitter legal regimes. You're required to register, or there's at least something you have to do. And then New York is sort of front of mind for the bit license regime, have fairly exhaustive bodies of regulation around crypto assets and entities that touch the cryptocurrency industry and requirements for them. I would say that New York is in many ways an outlier there. I mean, I don't think a lot of other states, when you think, when I'm advising clients and they're saying, well, I want to be in all 50 states, and like, probably start in Florida or Wyoming or somewhere a little more libertine with regard to cryptocurrency, and maybe New York is the last one you tackle. It's the most expensive, but also it's going to be the hardest work. And then for other federal, I think with the stablecoin discussion, the OCC, the FDIC, the Federal Reserve have come into the discussion. The OCC probably more so when Brian Brooks was there and floated the idea that OCC supervised banks could potentially issue stable coins and certainly could custody them. I think that you're seeing a bit of a move away from that under the current leadership. And then obviously last, you've got the IRS from a tax perspective. If the infrastructure bill's provisions are actually become law, you're going to see potentially a larger reporting role that the IRS has with regard to cryptocurrency. Not quite to the extent as they do with fiat, but you're getting quite a bit closer if those measures do become law.
Terrific.
So
Yeah,
I think that's probably it from my perspective.
No, that's great. Thank you so much for that overview. Really appreciate that perspective. And I think we need to kind of get a sense of who are the regulators that we're trying to ultimately comply and the regulations to comply with. Just really kind of digging in. I mean, me and Cal mentioned sort of FinCEN, and I think it's true of sort of all businesses, crypto businesses, is like we're really trying to understand and comply, excuse me, with those regulations. So really very, very quickly, what are those regulations? Essentially, FinCEN says two things, or at least asks two questions. One, are you regulated? And the answer is if you are a money service business. And in crypto, essentially a money service business really is anyone who is sort of what FATF, the sort of UN of anti-money laundering, called a VASP, or a virtual asset service provider. Are you exchanging crypto for crypto? Are you exchanging crypto for fiat? Are you custodying crypto? It's really sort of anyone who sort of acts as an exchange in the crypto ecosystem is a regulated entity, is an MSB in terms of FinCEN. So the next thing then FinCEN says is, all right, if you are an MSB and you're regulated, this is what you are responsible for. And it's essentially building out a risk-based, robust compliance program, right? And that entails having policies and procedures in place, meaning KYC, know your customer information on every customer. It means responding to law enforcement subpoenas. It means filing SARS, which are suspicious activity reports, with your regulators, which I know we're going to dive into in a moment. And it means having a transaction monitoring solution in place so you really can understand and mitigate these risks of these different typologies. So that's really sort of what in a nutshell is who's regulated and sort of what are the expectations in terms of the compliance program. I'm going to channel Kevin O'Connor, who's I'm pretty sure is in the audience from FinCEN for a moment, because what he would say to me is you got to go directly to the source. And I think the source is probably the 2019 FinCEN guidance that basically sets out sort of what are the typologies and what are sort of the red flags that we should be looking for when it comes to. So this is sort of a promo for like, read the FinCEN guidance, right? Read these advisories because they're so helpful in kind of understanding what is expected. But that there are red flags for darknet markets, unregistered peer-to-peer exchanges, unregistered foreign money service businesses, unregistered Bitcoin ATMs, and really sort of just spells out the illicit activity. But the other thing that's really, really helpful, and this is sort of a jumping off point to kind of hearing how you guys do this, is that they even sort of provide like what is the expectation when you're filing a suspicious activity report with your regulator. They talk about wanting the wallet addresses, the account information, the transaction details, the relevant transaction history. So, even as far as sort of what is the information that you've gained from any investigation that you've done on chain or off chain, how can you sort of assist regulators? So that hopefully is a decent jumping off point to sort of what you guys do. But Merav, why don't I start with you and Mikhail? I'd love you to jump in here. Sort of, what does that mean? What did I just say? Right? Like, what are those policies and procedures? What do you think about when you think of KYC? What does your compliance stack look like? And how are you sort of complying with what we just laid out?
Mm-hmm. I think the first step for a compliance officer that takes on a new role as a compliance officer with a company is to understand their products and services and customer base. So you really need to understand the activity, how it's regulated, what the flow of fund is, which customers are you going to serve? Are they retail customers? Are they institutions, high net worth individuals, things like that? And then you go and you prepare a risk assessment based on the risks that you see coming from the activity that you are facilitating. So if we are allowing customers to deposit crypto with us, then we need to whitelist those addresses and screen them using a blockchain analytics vendor like TRM. But just taking a step back, so as you understand the risks and you prepare the risk assessment, you then have to prepare a set of documents, so a set of policies, an AML program, an AML policy with a KYC procedure, with an OFAC policy, with an investigation procedure. So all of these things together make up your AML program and compliance program for the organization. then you need to go and do something with these documents. And you need to make sure that everything that is written in these documents is actually being done and executed. So you need to have someone to do that. You need to make sure that you have a compliance officer, that you have proper staffing, and you need to create actual procedures in the business and train the employees and specifically the AML staff on how to go about doing that. Should I go into more specifics now?
Sure, absolutely. And then we'll sort of get Mikhail to jump in and sort of talk about sort of what does the technology look like? What are you guys thinking about at Circle? But yeah, no, please keep going. This is awesome.
Fantastic. So on the KYC side, first we interact with a potential new customer, right? We start collecting information. I use a type form with a lot of questions that make up some of the information that I am required to collect at onboarding. So information on the business activity and the business name and the corporate documents and the beneficial ownership and passports, government IDs, SSNs, source of funds. I need to understand the business activity and what funds will these individuals or businesses be trading with, or if they're trading on behalf of someone, are they a financial institution? So we then need to collect information on whether they have an AML program, if they need to register, are they registered? So all these different things. And then we use a KYC vendor to plug in the information on this business and the individuals behind this business, the owners, to verify their identity, to prevent fraud, to see that they are who they say they are, they're not criminals, and to screen them against OFAC lists, against PEP lists, against adverse media, and all kinds of law enforcement databases. So that's the KYC piece.
Yeah, no, that's super helpful. And Mikhail, I imagine your answer is yes to what she just said, right? Like that's exactly how you do it. But yeah, you're on mute. But yeah,
strong yes.
Yes,
absolutely.
Please jump in and love to hear kind of how you guys are thinking about it for sure.
Yeah. So as one of the largest stablecoin issuers in the space, we have a really unique position of how our products and services touch businesses and down the line consumers. And so Circle serves institutions primarily, and so what that looks like is very similar to what Merav just went over from an onboarding perspective. And one thing I want to touch on is there's a lot of information you can collect up front from a customer, right? But it's also about what relevant, productive information you're collecting. In my career, I've seen onboarding programs where there's too much information requested up front that might not even be relevant, that might actually muddy the waters of understanding what a client's doing, or the questions are not properly targeted. And so that really feeds into how you're going to disposition that customer in the future and take their activity into consideration when it comes to investigations and tuning your transaction monitoring program. Additionally, as we have a very unique set of instruments here and technologies, this is borderless, right? We know that sanctions is a primary concern here. Geo-blocking is a critical control that every VASP and financial institution needs to implement when they're working with virtual assets. And so what that looks like is not only from an onboarding perspective of identifying and blocking IPs from sanctioned regions, in addition to any sort of sanction screening and controls that you have, but also ongoing activity on that account, right? If an account logs in from North Korea, right, that's a strong red flag, and that should be prevented and controlled through your technology. And all of that feeds into our transaction monitoring programs then, right? So what is our customer doing? And so you have both the fiat side transaction monitoring and the crypto side, which is why we're all here today with TRM, of really understanding let's break that out, right? On the fiat side, it's very clear what's going on because you have direct insight between your customers' deposits and withdrawals between their financial institution and your product. So typically the fiat transaction monitoring rules that you're developing are done in-house or they're provided by another third-party platform. But historically on the crypto side, right, there never was anything. And so early on in the industry, what you saw was investigators going directly to block explorers and trying to make their own attributions, which was a wildly fun time, and it provided a amazing opportunity for training and personal growth, but obviously isn't sustainable in the long run. So now we have fantastic information technology providers such as TRM that are able to take real world information and attribute it to on-chain identities and wallet addresses, and provide information from both the public and private sector to build a rich data set that you can action on. And so then with that data set, you can tune your rules around it and say, I will only interact with addresses that meet the following criteria. Or I will alert on certain addresses and activity. And you can also tune those volume thresholds, right? And so each institution is going to have its own profile and risk tolerance, risk appetite, and that's critical for establishing that at the onset when you're thinking about your business products and services. But one of the things I want to really reiterate here on the transaction monitoring front is, to an untrained eye, to someone that's squarely in the traditional financial realm, most of crypto is going to look suspicious to you, right? It's most of that activity is going to look very suspicious to you because it's foreign. There's a sort of language that's spoken between the users and individuals within and institutions within this community that's very different than traditional finance. And a good example might be if you think of a DeFi contract, right? Of maybe it's lending and borrowing. If you look at the way a customer from your VASP is going to interact with that smart contract, they're going to have to send out to an unhosted wallet. So there's one hop to their personal wallet to simply interact with that smart contract, which might look like attempted obfuscation. And from there, you're going to see that customer interact with the smart contract, and they might do it on a frequent basis, right? There might be multiple deposits and withdrawals that might look suspicious if you were a bank, but due to the technology, which the technology sets the tone for the customer's activity, it's critical that you understand that, especially when it comes time to file a SAR, right? Because if you file SARs with unproductive information, or maybe at the end of the day that there was nothing actually suspicious going on there because you didn't have the right context, you're not providing law enforcement and regulators with actionable quality intelligence. So it's really critical that you understand first and foremost, like what the industry is doing and what that activity, what good and bad activity looks like. And I think that's the critical training piece that Murav spoke to.
Yeah, no, that's awesome. You hit on so many interesting points. One was sort of from the geo-blocking perspective. We've seen a series of OFAC enforcement actions for sort of essentially exchanges failing to, put that in place when they had the capability. And it's sort of an interesting point. I already made my plug for FinCEN, reading FinCEN advisories. You got to read OFAC enforcement actions, right? As a compliance professional, that's really how you learn sort of what did they not do here that we should make sure that we have in place as we're sort of building out this capability. Yeah, you hit so many interesting pieces here. Sort of actually listening to all of this, right? You are essentially advising clients, at different stages of the process in terms of them building out a compliance program, sort of getting in as much into the sort of nuts and bolts of that process. Sort of what role do you play there? And then sort of how do you kind of build that? How do you help them shape and build that compliance program?
Sure. Before I get into that, I just wanted to say, because you brought up geofencing or geo-blocking from an AML perspective, and that FinCEN's going to look at that. The SEC is also going to look at that in terms of if there is a token that the SEC deems to qualify as a security. A threshold consideration is, do we have jurisdiction? It's a security, but maybe it wasn't offered in the United States. We see, a lot of Russian actors here, or a lot of, Malaysian actors or whatever. And if we can't find a U.S., connection for this, we don't have jurisdiction. Like, that's the SEC speaking. And one of the things they'll look at is they'll say, the enforcement lawyers will go to their senior officers and say, well, look, like, we've got this, and they're putting this out on the internet. It can be enough, though I would argue it on standing alone is not enough to simply have failed to geofence out, the U.S. from your offering materials. It used to be that the SEC would say, if you don't do that, and this is a security and you were offering it via the internet, we're going to deem an offer of securities to have occurred within the United States. I think that's still a risk you run, in terms of designing your token offering. There are exemptions from registration that you can try to qualify for if you don't do that. But, a threshold I guess all of that goes to the point that you should have a plan ahead of time for, you don't want to have the SEC knocking at your door and you're looking through the rule book to see what exemption you can qualify for. You should have considered this and maybe should have had some geofencing. But in terms of risk-based compliance, I think, Ari, it's everything that you said. It's looking at, the FATF, what Ari mentioned, the Financial Action Task Force that puts out recommendations, which usually quickly become baked into regulations within the member countries of the FATF. And they put out documents around, red flags for crypto transactions, and, FinCEN does the same. So, that sort of thing is going to give you a good idea of what detection systems you might need in place for location of the initiator of a transaction, size of a transaction, any different red flags that could make it incumbent on you to take a closer look. And I think, then looking at it from like a securities perspective, there's not a lot out there in terms of guidance. There's a lot in terms of traditional guidance, but I think a lot of folks in the crypto space, have worked out ways that they don't think that those existing regulations apply to them, which may be true. Like I said, there are exemptions and everything, but I guess, what we usually say is if whatever activity it is that your business engages in looks like a regulated activity, or is substituting for a regulated activity. If you're creating a marketplace where buyers and sellers can sell crypto assets, you might look a bit like an exchange or an alternative trading system. It would not be the worst idea in that context to have policies and procedures in place that an alternative trading system or national securities exchange would have, so that if the FCC, does come knocking at your door or send you an email asking for information, you can come back with okay, happy to have a discussion. These are the policies and procedures we have in place because, we recognize that our activities could implicate some regulatory concerns. Frankly, this is just sort of me talking. Had you decided we should just go ahead and register as a national securities exchange or as a broker dealer and then qualify as an ATS through that takes so long these days. Commissioner Peirce made this point in dissenting from the Poloniak action filed in August that, you're asking them to do all these things and you're saying that they should have been a national securities exchange. First of all, there are fewer than 10 of those formed in the last, 15 years. And also, the SEC and FINRA have had sort of roadblocks in place if you're a crypto business and you're trying to go through that registration process. I'm not saying it'll never happen, but it will take a hell of a lot longer to happen than any startup entity is going to have to spend before they get off the ground. So whether you're going through that process or whether you think you don't qualify for it, having a risk-based compliance program in place from a securities perspective as well as a financial crimes perspective can be of real value.
No, that's awesome. I'm going to mix things up in a second because we're getting some awesome questions from the audience. But one statement, Kevin O'Connor, who I name dropped earlier, said that we need to also be looking at FinCEN enforcement actions, not just OFAC. And yes, the pro tip, I think, for compliance professionals is really, look, if you're trying to skate to where the puck is going, you really need to look at these enforcement actions because they're happening in many respects before these advisories or the guidance comes out. And there's so much we can learn from them, whether it's OFAC, FinCEN, or sort of another regulator. So no, appreciate the comment there. And also some other really good questions. Ilyas, let me jump to you here. And I think Ashley's comments were a really great jumping off point. Look, you are going in and working with compliance teams like literally every day, and they're at different stages of sort of building out that function. I mean, some are very, very early, some are sort of brand new compliance professionals. Can you talk a little bit about sort of the challenges that you're seeing out there as you're sort of going in to work with compliance programs, and then also sort of how you're doing that? Sort of what are the practical steps you're taking from TRM's perspective out there working with compliance teams?
That's right. Yeah, so the biggest challenge I see is actually finding talent. The people that work in this space, it's a small pool of individuals. So we tend to get a lot of people that come from traditional finance, and it takes time for people to get trained up and understand the risk of the on-chain activity. Like Mikhail highlighted earlier, it's totally different. The typologies are different. The risk and what it looks like on-chain is different than traditional finance. So finding talent and making sure they are trained and understand what they're looking at has been a challenge. Another thing is compliance teams, especially for emerging cryptocurrency businesses, tend to be small. Sometimes we have CEOs that are trying to implement and use a blockchain analytics tool. And having the lack of resources and individuals to implement these processes and figure out workflows on how to use these tools is also a big challenge. And finally, this is a fast-moving space. Assets are being created every day. Services wants to offer those and risk assess them. And when compliance officers are thinking about how to write the program, the policies, and implement their tech stack, they should really vet their providers and their ability to scale with their business, right? Compliance officers want to add a new asset on their platform. At the same time, they don't want to without having the ability to have some type of a risk assessment on what they have to look for and how they can manage the asset. So these are some of the biggest challenges I see when I work with crypto businesses.
Terrific. And just staying with you for a minute, Ilyas, how are you sort of working with teams to kind of mitigate those challenges, sort of to overcome them? What is the training? What are the tools that or really sort of what are you doing, day to day to kind of help them work through that?
Yeah. So part of it is training on the on-chain piece, right? Helping them understand how to use a tool like TRM, understand what the typologies are for the different blockchains, what they should be looking for, what's their risk. At the same time, building workflows around their transaction monitoring system, understanding what the alerts that they should be investigating further and what they should be looking at, and really kind of just being their go-to person for any resources when it comes to needing any reference or any help when it comes to trying to navigate this world.
Yeah, no, thank you so much. I'm going to pivot for a moment because we're definitely kind of getting some interest in the Q&A around sort of law enforcement and how you guys are thinking about working with law enforcement. Merav, why don't I start with you in terms of subpoena response, SAR filing, sort of that whole process. Can you sort of describe your processes for sort of engaging with law enforcement in sort of the subpoena piece, and then maybe sort of in the SAR filing piece, and sort of in terms of how you're working with regulators?
Yeah, so thankfully we with our volumes and customer base and kind of the long onboarding cycles and really getting to know our customers at onboarding, we don't see too much SAR activity so far. So that's like a blessing. We do have a law enforcement policy in place, so we do know how to handle things if they come in. It's very important to do ongoing transaction monitoring, ongoing screening. Things that I look for when I work with blockchain analytics vendors, or if I consider a transaction monitoring tool, is to make sure that I get alerts or that things are flagged when there are changes. So you really need to not just look at things at the beginning, but continue the process and know your customer all the time, not just when you interact with them for the first time. So that's definitely a big piece of this. And then if I need to investigate something, if it's on the blockchain, Ilyas has been super helpful. If I need his expertise with understanding something that was flagged. And then so you go through the investigation process, and then you decide based on what you know of the customers on this customer and the information that you collected at onboarding and their overall activity, you just need to determine whether this is okay, or if something just doesn't seem right and you want to consider filing a SAR.
Terrific. Yeah, thank you so much. Mikhail, just kind of moving to you, same question, sort of like talk a little bit about your engagement with regulators, with law enforcement.
Yeah. So I think number one, it's starting with good faith efforts, right, to build those relationships above all. Knowing if you sort of bifurcate this industry, there's those that operate in the light, and there's those that operate in the gray and in the dark. And by always wanting to come forward and work with law enforcement to proactively share signals and intelligence when relevant is critical. So that might look like emerging typologies and trends when having those relationships. And I think it comes with actionable intelligence as well. When you're filing a SAR, what is the quality and the content of those SARs? So when that reaches, when law enforcement goes into the database and queries and pulls a report, what is that report going to say? Is it going to say Alice sent to Bob and that's that? No, they would love the details and the rich narrative around it, right? Alice sent to Bob at this time. From there, the money moved to unhosted wallet, which then touched this protocol, et cetera, to build the adequate picture, which comes with those trained AML professionals to understand that activity and be able to adequately describe and report on it. Our director of AML and sanctions, Joanna Marathakis, has a fantastic team of folks that are always not only responding to alerts, responding to the day-to-day needs, but also looking forward down the line. What's coming, right? What is law enforcement saying, and what can we potentially say to them before problems happen, before these issues hit VASPs and potentially sort of poison the regulated ecosystem. And so I think it's this ongoing partnership that becomes more rich. And I think not only is it law enforcement and regulatory relationships that continue to become more robust and helpful, but also VASPs with each other, right? Because that signal sharing, utilizing the 314B process is going to help you understand customers more, and that's going to trickle down to law enforcement for their actionable intelligence as well.
No, that's fantastic. Thank you. Kind of pivoting for a second to the chat, because I think there's some really, or from the Q&A, there's some really good questions. And Stephen, I'm not going to put baby in the corner anymore. You've now asked the same question twice on NFTs, once on LinkedIn and here. So I got you. All right, we're going to do this. So the question is, what? And actually, a couple other folks other than Stephen Sargent and had this question, but sort of. What do things like NFTs and DeFi mean in terms of compliance in the regulatory space? And I'll kind of take a preliminary crack at it and then kind of kick it over to you guys. But really, I think what you're seeing right now, at least, is that FATF provided some sort of revised draft guidance or updated draft guidance in March that really hit on a couple of these sort of hot topics in crypto. One was, NFTs and DeFi. And really in the NFT space, what they said is that these regulations or regulators don't capture for purposes of this conversation or being a virtual asset, sort of these typical non-transferable, non-exchangeable, non-fungible items, right? Like airline miles and benefits that you get from your credit card, things that you can't move around. But if you can move it around and transfer value with it, then it is very possible that is regulated. And again, this is draft guidance. I think we'll have a lot more perspective on this over the course of the next few months when FATF finalizes that guidance, and really kind of excited to dig in there as well. But it seems to me right now, and this is kind of why I think it's a great question, right now, what FATF specifically says, and I'll read it. It's some items on their or tokens that on their face do not appear to constitute virtual assets may in fact be virtual assets if they enable the transfer or exchange of value. So I think it's that line, sort of enable the transfer or exchange of value, that we should all be thinking about. But I'd love anyone to sort of jump in on this, but Merav and Mikhail in particular. We talked about skating to where the puck is going earlier. How are you thinking about things that don't have true regulatory clarity yet? And how do you build a compliance, infrastructure around that? Merav, I see you kind of smiling or grimacing. I'm not sure. So why don't you give this one a go, and then we'll kind of kick it around through.
Yeah. So broadly speaking, and so we introduced like staking SDX, for example, which is a very innovative type of product pretty recently. So every time that I look at a new offering that is proposed within the business, then I need to understand the type of activity that we will be facilitating and what regulations that would trigger. Am I doing something new here? Am I all of a sudden doing custody that I have not done before? Do I need to update a regulator on a specific application or registration process that I've initiated or completed already with this new information? So there is really a lot to analyze here and really understand the technicalities and details of the new offering. I haven't had the opportunity to work closely with NFTs. I think it's a fascinating space. There are risks with this technology broadly. I think we should figure out a way to allow this space to thrive. I'm a big fan of this type of innovation. I think one thing with NFTs is potentially understanding the provenance, preventing fraud. If you are interacting with other type of NFT specific platforms or exchanges, so you want to understand what process they go through when they list these NFTs on their platform for you to interact with or purchase. What process do they go through? Who are these people who created? Who is behind this program? Is it maybe some kind of enterprise that is behind this NFT? Maybe it's even a security, going back to some of the points that Ashley introduced earlier. So there is really a lot to unpack. So it really is dependent on the specific type of activity that you want to conduct and how you want to engage with these products. We can't hear you, Ari.
Oh, you're muted, Ari.
Muted.
Yes, I am. Thank you. Mikhail, any sort of additional thoughts on that? And Ashley, I got a totally different question for you. So hold that thought.
Yeah, I'd love to speak on this topic. So, we have a number of clients that provide, NFT, digital collectible goods and services to their clients. And the first thing that we look at when considering them is, open versus closed loop, right? So what is the nature of that relationship with our customers? Can those NFTs go off their platform? And what does that look like? What controls are in place and what's the regulatory status, et cetera? But I really want to touch on the DeFi front, right? That is the biggest discussion in this space right now. There's varying degrees of guidance around how to treat DeFi platforms, the obligations that the developers of those smart contracts have themselves. But how, as a VASP, do you treat your customer interacting with them? And I think it goes right back to what I was saying around the context of that activity, the monitoring that you have in place, and also the risk of the platform itself, right? Is this a primarily institutionally used DeFi platform, or is this something that's widely known to be engaged in higher risk activities within higher risk regions, et cetera, things like that. But I also think it's on each VASP and also the industry together to coordinate what new kind of controls we could propose to enable this decentralized future in which these the immutability, the protections, the trustlessness of DeFi and blockchain broadly can continue to improve commerce, our economy, and our socioeconomic relationships with each other, while preventing a lot of the fraud and criminal activity that we've seen that has hurt the industry as well. And so that might look like, what sort of decentralized identity solutions can we put in place? What sort of on-chain controls could we put in place, et cetera? And that's on the industry to decide. But I think that it really comes down to cooperation and participation. We're not in a vacuum here. We're all in this together. And I think regulators look to the industry, and I think travel rules, someone had asked a question there, is a prime example of that, right? The industry was responsible for coming together and identifying a solution to a very difficult problem, and substantial progress has been made. And we regulators will see that these regulated VASTs are coming forth with that promise, fulfilling that promise of having a travel rule solution in place. So I can't reiterate enough that participation component, and then the ongoing innovation, not only for blockchain technology itself, but for the compliance needs of blockchain.
So just real quick, because seeing the clock ticking, Ashley, hold your fire real quick. I want you to take us home. So in a moment, because I got a great question for you from the chat. But Ilyas, would you jump in on this? Because I think what Mikhail said was really so helpful. Sort of like when you're talking to compliance teams right now, what are the expectations from sort of a blockchain analytics tool, or sort of helping with that compliance stack at all, right? Like how can sort of the technology answer or solve a lot of the problems I think that Mikhail and sort of Stephen in the chat mentioned in terms of NFTs, DeFi, asset coverage, these sorts of things? I mean, how can the technology solve some of these problems from your perspective?
Yeah, so when I think of a compliance stack, I'm thinking of like the KYC vendor, fiat transaction monitoring, crypto transaction monitoring, and case management, right? And within our world of crypto transaction monitoring, I think it's critical to have features such as customizable risk engine based on a compliance team's risk-based approach. Also, asset coverage, full coverage of assets that a customer is monitoring. At TRM, we cover 23 blockchains, about 1 million assets. And being able to have a risk assess any asset that you provide is also very important. At the same time, cross-chain analytics, mono-chain tracing is no longer sufficient. We see a lot of chain hopping as criminals move illicit funds, and it's critical to be able to follow that holistic movement. And finally, having that user experience when you're using all these tools, there's a lot of we focus on building industry-leading data and analytics, but at the same time, we think a lot about the user experience. As we have more folks joining from traditional finance, it's critical for them to be able to use tools that are intuitive, are easy to use, and for them to get trained up as fast as possible. And when they're thinking about what compliance stack they're looking at, it's important to think about all these different aspects.
Cool. Yeah, no, thank you so much. All right, Ashley. So I got this great question that I love from Rio. And it's interesting. I think it's a great jumping off point, or sort of a great way to wrap things up to some extent. And that is, look, regulators are laser focused on non-compliant, entities in the space, right? The SUXs of the world, for lack of a better description, or, what happens when compliance fails. I think that's obviously going to always be the focus of enforcement actions and designations from regulators. But the question here is, does the panel feel that the industry has an opportunity to influence regulators by having good policy and procedures in place? Can what Mikhail and Marav described as a risk-based, robust compliance program, can that help from a policy perspective? Can we have some influence by having great policies and procedures in place?
I guess two things, but I have to jump to the NFT thing quickly. Please. What I've always taken as instructive from the NFT space is FinCEN's guidance around art and collectibles and their ability to fall within the Bank Secrecy Act, and it's the obligations around it as instructive.
Yeah, no, that's a great flag. Awesome. Yeah.
Yeah, in terms of what the influence that good policies and procedures can have. I mean, look, at the end of the day, having a good faith effort that you can hold up and say, look, this is what we're doing. If you want us to do something else, let's have a conversation about that. And, we're happy to implement it. But, in a vacuum, this is what we've done because we reasonably thought that, this was a way to protect against X, Y, and Z risks. it's a self-protective measure. In terms of influencing policy, I mean, yeah, look, if you get out in front of things and you're vocal about that, and you become, you have to be willing to do this, but you become sort of a poster child for being compliant in the space, and the regulator can then look and say, all right, look, we've got one or more entities in this space that have, taken on these obligations, and they're still alive, they're still thriving. So that's an example of a way to do things the right way. And we're going to say that if you're doing things like entity X, maybe you're doing things the right way. On a more granular level, yes, you can always go in. I take clients in regularly to meet with SEC commissioners and their staffs, or to go in through the FinHub at the SEC, which is a great resource, and just have conversations. You can do it on a no-name basis if needed, and just kind of get an idea of their thinking around different topics, and have them hear from you, what your thinking is from industry, because that interchange is really going to be the basis for hopefully, some thoughtful regulation like.
No, thank you so much. And literally, I think with that, we'll let Ashley kind of drop the mic on all of this. I think my biggest mistake today was not booking enough time for this. Frankly, there's so many more awesome questions in the Q&A. As you guys know, I had many more questions that I did not get to today. But really, like that, all that means is that it's got to be sort of nuts and bolts part 2, sequel, which in this case will be even better, I am sure, than the original. Thank you guys. Thank you really all so much for joining me. Just a couple quick things. One, TRM has a weekly newsletter that folks on this call are into compliance issues and law enforcement and regulatory issues for the cryptoverse. Please sign up. There's a link in the handout section on here. And we will be back in November with some awesome cutting edge content for you on TRM Talks. Fill out the survey on here from the Big Marker, and let us know how we did. And the other piece that I think is really important, look, we want to build TRM Talks for you. So if there are topics, if there are people that you want us to cover, we are all in on that. So please let us know what you want next, and we'll go from there. Again, thank you to this panel. Thank you to the audience. And thank you to all those out there that are keeping our financial system safe. Thank you and have a great day.